know how to prepare them for life in the markets.
All right, enough of that guy. Hey, welcome, Todd here, trading analysis and Inside Edge Capital Management. Just gonna do a quick live stream. I told my wife I would be done working at 7:30, 7:55. Got to make this quick, but gold. A lot of people are pretty bulled up on gold. There's a couple reasons too that I think it may crash, and crash is defined by a 20% more or greater decline. So let's jump in. I'll show you where I'm coming from with that. So what's going on here is we're looking at two things on this chart. We're looking at real yields, which I'll explain, and we're looking at the gold future. So gold is on the left. This is not inverted. This guy, real yields, are inverted. So, okay, let's start with gold first. You can see gold back into the late 90s. We rallied up from 200. I remember prop trading in San Diego here, trading gold miners at $220, $30, $250 an ounce, and then we rallied all the way up to 17, 1800. And what was helping gold move higher during that period? Obviously, post 2000 crash. Plus, we had Greenspan slashing rates to combat that. And what happened is real yields were moving in this direction, which real yields are inverted. You can see over on this scale, you can see that we're going from 3, 2.5 to 1.5, 1.5%, almost up into negative real yields. Now, what are negative real yields? Or what are real yields? You take the nominal yield on your bond product. So for example, the 10-year yield. The last YouTube video I did, I showed that there was key technical resistance from 4.07 up to 4.18 in the 10-year yield. We held that resistance, backed off, and the NASDAQ has rallied 5% as a result. The 10-year yield, the nominal, this is key for the future of this newly budding, potentially emerging from hibernation bull market. If we go up back through 4.1, 4.2 in the 10-year stock market, and specifically growth and tech are going to have, and comms, consumer discretionary, are going to have a problem. So watch that. That was the last video. Go back and review that. Now, to do the real yield, what you're doing is you're taking the 10-year, the TIPS, the expected break-even inflation, TIPS, Treasury inflation protected securities, where inflation is viewed to be 10 years from now. So right now it's about 2.5%, 2.55 the last I looked. You take that, you subtract it from the nominal yield on your 10-year treasury, which right now we close below 4%, below that resistance level I talked about in the last video. We closed at about 3.98. So right now your real yield is at about 1.50. Now, why would gold rally? If you can make money in the stock market, or you can make money with real yields, which again, your nominal yield being above the inflation level, there's no reason to own gold. Well, when would gold rally? Percent, we're off the worst levels, about 1.0. Sorry, I'm not showing you. Here we go. Sorry, now I'm showing you the chart. Real yields, okay, have gone, sorry, right here. Purple, real yields have gone from 3 to 1.5, 1.5, as the gold market has rallied up into 2012, okay? Now we went up, gold took another shot at 2000 right here, and real yields have dropped significantly down to 1.9 off the worst levels. So if history is to repeat itself, we should see a pretty significant drop as real yields are moving back up, right? So perhaps, we're going to have a little bit of a non-confirmation like we had here in 2004 down to 6. Real yields were moving up. Gold continued to rally. It's possible, okay? But I don't think this is the case. I think this is a time where gold is going to catch down, okay? Because I do think that real yields will continue in this direction. And number two, if we look at the wave count in gold, here's where we are. Okay, this is coming from 2016. I see this as 1, ABC expanded flat 2, 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3. Beautiful 5-wave move inside of wave 3 up to 2022. We drop down an A. Okay, now B wave. I don't see this as a 5-wave move. Okay, if you are saying that this wave 4 was over here, you need to see something that resembles a good 5-wave motive wave, either diagonal or an impulse. You don't have that. Okay, this kind of looks to me as like ABC, X, ABC. It looks like the wave 3 is the choppiest, most congested area in here, where this looks to be more of a 5-wave move. Something like, I already have it decomposed. Yeah, I have it as 5-wave move, and wave 5 is a diagonal. This could easily be complex ABCX, ABC, and then that would mean that gold, if we were to fail below the 786 retracement in gold here, 1910 to 1938, that would be a pretty good failure zone for a C wave decline in gold, which brings you down into the 16, 15, 1400 area, which that would be an approximate 21% decline. And again, going back to where real yields are rallying, there's not a lot of reason, I think, to be holding gold. And so that's going to be enough for now. My wife's going to be looking for me already a half hour late. Hope that helps. Just a little talk about why gold is following real yields. Real yields have dropped. We got to see what happens. You know, what would cause real yields to move up? Well, either 10-year longer-term inflation expectations need to go higher, which I don't think is going to be the case. If anything, I think we're going to start to see with the number coming up on the 14th, we're going to continue to see softer inflation readings with services coming down, housing coming down. So I don't see that happening. Real yields pushing higher. The other side would be, you know, if inflation expectations are going to go anywhere, then maybe we're going to back away from that 4.07 to 4.17 resistance zone that I put in the last YouTube video. And if that's the case, the rotation that we're focusing on in the stock market with our members and clients, mainly rotation into small and medium cap growth, which is consumer discretionary, tech and communications, if we're rotating in with yields staying below 4.1, why would you want to hold gold if the stock market's going to rally? Let me know what your thoughts are. All right, I'm going to leave it there. Go hang out with the family. Have a great night. I'm going to try to do one of these every day, hopefully. All right, have a good night. Thanks.